Good morning. I want to make a quick weekly outlook video, week ahead video on what I'm expecting in basically the second week of November and what has happened in the last week. But before I do that, I wanted to quickly run over this trade idea that I saw during the Asia session. So we opened up. Actually, let's enable the new week opening gaps. I know there's gonna be a lot of lines on the screen, but I'll try my best to make it as clear as possible. So looking up here, we opened up here. That's where the new week opening gap is, this gray shaded area. We had the new week opening gap created during the Asia session over there. So its price printed. I was looking at this inefficiency below us on the 30 minutes chart, which is this one, this fair value gap in the form of a buy side imbalance. So I was looking at that. It's also where the previous session low is, which is New York PM session from Friday. So I was looking at that, and while we're trading higher, I had two things in mind. The first one being this breaker bar, and it's above the Asia session high. So when we traded above Asia session high in this place like that, I actually thought we had the high of day already printed and we had already taken out Asia session high. But at this point, we traded higher into the new week opening gap multiple times until this next candle, when we traded into it one more time and there. So in this candle, right, we closed, we traded to the essentially the high of the new week opening gap, because when we check to see when did we close on Friday, when did we close on Friday, open on Sunday? On Friday, we closed at 4424.25. I'm looking up there at the closing price for Friday's candle, 4424.5. And then the opening from Sunday is 4425.75. So when we check the high of this one, we can also see that that's 4425.75. So we literally tested the high of the new week opening gap and then rejected lower. Already this was the first sign that I was on the right side when it comes to bias. And moving on, printing price, we had this fair value gap here created. And we traded into the consequent encroachment, which is the halfway mark, and we can see immediately price tagged in there. We just ran through and swept the previous session low, which in this case is the London session low. So we can now remove all these alerts that I put on the screen for the trade idea. But yeah, and we'll get back to this. We'll get back to breaking down the S&P 500. For now, I just wanted to share this with you, and I still think we'll trade a little bit lower. I'd like to see us trade into this other block, these two consecutive red candles. So basically, the target would be where this yellow dotted line is. So I'd like to see if we can trade below this shaded area, this giant purple area, as a target, without taking out this high that was bounced from the new week opening gap. So that's what I wanted to share. But moving on to the actual analysis on what happened last week and what to be expected this week. We'll start off with the dollar index. So on the dollar index, starting off with the monthly chart, we have the same view that we've been having for some time now. The only difference is that we created a monthly fair value gap in the form of a buy side imbalance. So this here would be a BC. From this candlestick's high to this candlestick's low would be a buy side imbalance. essentially this area for those that might not know, right? So we have this area, this shaded area as our buy side imbalance, and we can see how price is already rejecting away from it right now. But one critical area that I have highlighted was the halfway point. So measuring this high to this low, the halfway point is here, which is the consequent encroachment, and that's the 104.904 level. So this blue line, keep in mind that it's the consequent encroachment of the monthly buy side imbalance. So let's go down to the weekly chart, my favorite time frame, and the time frame I believe everybody should be paying most of their attention to or on. On the weekly chart, we can see week after week from this point when we swept this swing high there, which is 1 2 3 4 5. Technically about 5 weeks we just consolidated in this range here, and then during NFP we fell off aggressively but did not necessarily touch the consequent encroachment of that monthly buy side imbalance. So then on Monday we opened here, traded lower into it on the same day, and then started rejecting higher. Yes, we technically could have looked at this as a change in the state of delivery and a possibility of this area being used as a bearish order block to the downside. Yes, we have that possibility, but that's not what I'm looking for. That's not what I'm favoring. But I do have that at somewhere in mind that we could find something like that playing out. But since that's not what I'm favoring, going down to the daily time frame, we can, removing this arrow, we can sort of see the thought process that I had, and I still have. We have the chop, which is the accumulation, this whole area, and then finally broke out of it, which is to me the manipulation. So this run below was just one big manipulation to me, and I believe we're gonna displace higher, clearing this buy side liquidity on the left there. So that's what I'm looking for, that's what I'm aiming, that's what I'd like to see moving forward on the dollar index. So if I'm looking for bullish prices, then I'm looking for every down close candle, every red candle to support higher prices. So here we have a red candle. I would like to see support higher prices as a stepping stone in a way. And speaking of that, tomorrow Tuesday we have CPI coming out. So I'm hoping, praying and expecting that CPI to be the one to finally close this liquidity void that we can see here on the daily chart. In between this candlestick's low to this candlestick's high, we can see that absolutely no trading whatsoever was done in that area, and that makes it a liquidity void. If we had measured this from here, from this candlestick's opening price to this candlestick's opening price, we can have this area which is not a liquidity void but rather a volume imbalance. So I'm looking at the liquidity void as the stronger draw on liquidity right now. Going down to, let's start off with the 9-hour chart. On the 9-hour chart we have this 9-hour, let's delete these because we had this market structure shift on that Monday of last week, and a perfect entry to actually catch the bottom of the dollar index as well as GBPUSD and EURUSD, but we'll get to that soon. So here on the 9-hour chart we have this buy side imbalance from this candlestick's high to this candlestick's low, and we can see how so far the bodies have been respecting inside of it. And we all know that the invalidation point is the first candle or the third candle that creates a fair value gap. In this case it's here, so this would be my invalidation point. Let's mark that out. So this I would consider it to be in my invalidation. Over there, going into this week, I would, of course, we could find ourselves trading below one more time and sweeping liquidity one more time, but I would not like to see that happen. So let's go down to a lower time frame. On a 4-hour chart we have this buy side imbalance as well, similar to the 9-hour chart. We also have this bullish order block residing here from this candlestick's high to the body, The most sensitive part of an order block is this area, and we can see how price already tested there today. But I would ideally like to see tomorrow, Tuesday, during the London session, to create the low of the week on the dollar index. In other words, I would like to see us trade into a PDRA like this inversion fair value gap. So here we have a CB pulled out in time. I would like to see this act as support for higher prices on the dollar. So that's all I'll be liking to see. Of course, moving higher, I did already mention that I'm looking for this liquidity void, and I have this alert set here at this swing high, because that would notify me when we're close to tagging into the liquidity void. So that's what I'm looking for on the dollar index moving forward. Of course, the same applies on the GBPUSD, but just the opposite direction. On GBPUSD on the pound, ignoring all these lines and alerts all over the place for a second, we can also see somewhat of a similar reaction or structure. Starting off with the weekly chart on the pound, we had this sell side imbalance residing there from this candlestick's low to this candlestick's high. The space in between has no wicks, so just the body of a candle. So pull that out in time, we have a CB. So we tested it on Monday, the same Monday that the dollar decided to tap into the consequent encroachment of the week of the monthly BC. So we tapped into that and rejected lower from there. Going on a lower time frame like the daily, we can see that we also created a fair value gap here in the form of a sell side imbalance. We also closed this massive CPI BC, this buy side imbalance from this high to this low. We have a massive buy side imbalance here, and look at how price traded from Monday, creating a high of the week into a high time frame PDRA and displaced lower. Thursday came, we traded into this CB. We did not even bother getting to the halfway point of it, and then started trading lower from there. That we even actually closed below the BC. So this would be the low of the BC, right? This line, and that's the high. I don't need to point out the high because I want to shift our focus to the low, and we can see that we closed below the low of the buy side imbalance. So that to me is essentially using this entire area, this massive buy side imbalance, as an inversion. So I'd like to see this entire area support lower prices. So if I want to see this entire area support lower prices, what PDRAs can I see inside of it? Well, firstly, we have this CB that we had. We've already tested it before, but what's stopping us from going back in there again and falling off from there during CPI? Nothing. Absolutely nothing is stopping us from getting in there. And then the second one we have is actually here. Just last week we created a little CB from this candlestick's low to this one's high. We have a sell side imbalance there, like so. We have that sell side imbalance. So yeah, yes, I would have liked to see us trade into this and then follow from here. And I would also like to see the daily candles, of course, because we're on a daily time frame. I would not like to see a closure above this sell side imbalance, but I already mentioned that we're working inside of this entire inversion, so it is possible to close above this, trade into this, trade lower, then use this area, the fair value gap that we created over the weekend, then use it to support lower prices. So there's that possibility. So moving down to a lower time frame on a 4-hour chart, we have liquidity that was residing here during the previous session highs. Let's actually enable the sessions. Okay, well, can't really see anything on a 4-hour. We have to go down to a 1 hour, and on a 1 hour we can see it was a previous session high, which was a London high. We swept it, went into the 4-hour inefficiency, this 4-hour sell side imbalance, and basically this other block as well. I'll consider the last down close candle before the expansion to the upside as a breaker. So this entire area, so instead of this breaker we have a fair value gap there, so this makes this a valid breaker to me, this entire purple area, the last down close candle before we take liquidity to the buy side. And yeah, we got the sweep, we got the shift in market structure, so this entire area becomes the breaker, and I'm expecting this to hold price lower. What I did not like though is the fact that we didn't create the high of the week. Now I would have preferred that today we just essentially chopped around. I would have preferred that we played within the range inside of this daily, this small area, which is the daily sell side imbalance, the daily fair value gap. So I would have preferred this, so that tomorrow on Tuesday, London session between 2 to 5 a.m. I would have preferred for us to sweep the liquidity from today, then this plays lower. So this is what I would have liked to see. Of course, the daily candle today has not closed, anything is still possible, but this is what I'm looking for. If we don't get this possibility, then I'm paying attention to this higher inefficiency here on a 4-hour chart. So we could find price trading higher, clear these liquidities, these internal buy side liquidities, and then tap into this inefficiency, which coincidentally in a way would be the consequent encroachment of that daily one that we highlighted before this. We have the nested 4-hour one, so we could trade higher into there before falling off. So but either way, I would like to see Tuesday creating the high of the week and clearing these relative equal lows, these lows here, these sell side liquidities. So that's what I'm looking for going into this week. My invalidation point, of course, if I'm considering this fair value gap, then my invalidation point would be the third candle. I know technically this is the first one, but I'll go for this one. So I'm basically saying I would not like to see us trade into this inefficiency, then continue lower. So next one that we're going to look at is the euro, and part of this is also going to show you all why I'm not the biggest fan of trading Mondays, especially Mondays without a news event. So here we have a breaker, right, that I was paying attention to last week. We have a sweeping liquidity, a displacement below, market structure shift with a breaker and an inversion fair value gap inside of the breaker. So I was looking to see if we could trade into this area, which we tried here on Friday and fell off, but we did not clear sell side liquidity. Today we just traded into it again and fell off, but notice that here inside of this fair value gap, let me just show, I know it might look clean right now, but inside of this fair value gap we actually revisited here many times already. So on a 5 minutes chart we can see we spiked higher, we came down, this was once a red candle, went up again, came down, and now we're going back up. So these are signs of a choppy market condition. These are signs of not so clean price action, and whenever we get stuff like that, I would not like to participate at all in the first place. So again, just like the pound and just like the dollar, I would like to see the high of week made tomorrow before CPI numbers come out. I'm still of course targeting the sell side liquidity that I highlighted on my previous videos and the ones that follow after that, the same targets that I've had for a long time now actually. So I'd like to see those lows swipe, but the euro creating the high of the week, I'm not sure where that's gonna happen. It could potentially take this high one more time. I'm not sure about that because euro is the stronger of the two sisters, and exactly why I am paying more attention to pound than euro. I guess we can even see that from euro GBP as well. Euro GBP, we have this going on, an expansion now, a big push up from here. I'm not going to really go lower on a, I'm not going to go on a lower time frame, but already looking at here, we have this tiny fair value gap in a form of a sell side imbalance, right? We see that the previous hour closed above it and now possibly going to use it to support higher prices. We also of course have this area potentially to be used as a sign of a change in the state of delivery. In other words, we could call this a bullish order block. So we might start seeing support of higher prices from here on Euro GBP. See, and on lower time frames, of course, we can see it clearer. We also have this fair value gap in the form of a BC, buy side imbalance. So we might see price continue supporting bullish prices from here, targeting these liquidities until, of course, that high there. So that's what I'm seeing on Euro GBP, higher prices, meaning euro to be stronger than the pound, and therefore I will be focusing on the pound more when I'm selling the foreign currencies. So let's move on to the last two, the indices, starting off with the S&P 500, the E-mini S&P 500. We have the weekly chart essentially having another change in the state of delivery, but with a twist. So here we have a potential order block that we could come back to and test for higher prices. We also have a fair value gap that was created last week in the form of a buy side imbalance, but I don't think, with the way the markets are so bullish in this side, I don't think we'll come back to this, and we might just leave this as a breakaway gap in a way. And this last bullish candle before the move lower could be used as a possible area of support for higher prices. In other words, we could use this as a breaker when we close above it, so we could find price trading higher, coming back to it and pushing up for all-time high, especially on the NASDAQ, but we'll get to that in a moment. So let's go down on a lower time frame. On a daily chart, we have Friday's price testing this daily buy side imbalance, this daily BC, and pushing higher, and of course closing above the previous one, which was on Thursday, creating a potential area that we could call an order block, a bullish order block, and again an area where we can consider it to be a change in the state of delivery for higher prices. Noting one thing here though, paying attention to these numbers up here, the open, high, low, close. We can see the high of this candle is measured at 4430.5, and then notice the closure of last week's candle, which was on Friday. It's 4430.5. I don't think that's coincidence. I don't think that's by chance. That's more sign that this is all running on an algorithm and will be efficient, as efficient as possible. So I'm looking at this higher sell side imbalance on a daily time frame as my next target. I'm looking to see if we could support here, use this to support higher prices, take out this high, the swing high, and I want to see if we can close above this swing high, because I set an alert here. Well, I wanted to set one. I set an alert here where it will alert me when we close above this swing high on a daily time frame. So when we close above this, there's a chance that this CB may not support lower prices as I wanted. If we remembered earlier on my other videos, I wanted to see if we could find something like this happening. So if we don't see this, if we close above this swing high, there's a chance that we may not see price going lower, and rather see price cover up the CB, close completely outside of it, then use it as an inversion for higher prices. There's a chance of this playing out, so I'm keeping an eye out on this. But I'm right now going into CPI, I'm looking for higher prices. So let's go down to let's actually start with the 9-hour chart. On the 9-hour chart, we have essentially the same thing: internal low, sweeping liquidity. Let's actually highlight that, because some people might not know what I'm talking about. So we have this low here, or we can just take this one, it's fine, it doesn't really make much of a difference. So we have a sweeping liquidity, and we got a displacement to the upside, creating an order block. The last up close candle before the expansion to the downside, this entire candle on its own becomes a breaker. because we essentially violated it. We did not use it to respect lower prices, so it becomes a breaker when we trade above it and close above it. And notice how this breaker is essentially inside of the daily order block, and when we go on a lower time frame, even on a 4-hour chart, we will still see basically the same thing, same structure. So if I'm looking for Tuesday to create the low of the week in this case, in this scenario, then I would like to see us just sweep today's low. Of course, today has not ended. We're still trading at 11 a.m. So I would like to see if tomorrow we can sweep the liquidity inside of this daily order block and then find support for higher prices from here. That's all I'm looking for on the E-mini S&P 500. And finally, concluding with the NASDAQ, we have essentially the same structure. I don't have to break down the whole thing as detailed as I did with the S&P, but we can clearly see that on the NASDAQ we are extremely bullish. We've already closed above this swing high that I mentioned on the previous one. On S&P 500, we can see here, this is the previous month's high. We've already swept it and closed above it. We even closed, I believe it's the main threshold, I'm not actually sure. Let's measure that. This order block here, converting this to, okay, we have not tagged it yet, so this purple area actually comes from the weekly chart. On the weekly chart, we have this BC that could potentially act as an inversion fair value gap to support lower prices. It's also at the 50% mark of the order block that I just drew out now. So this order block, this last up close candle before the push lower, the whole thing is considered a bearish order block. So we may tag into this 50% and push lower. That's if, of course, we are looking for lower prices on the indices. If not, then I'm looking for higher prices. And if I'm looking for higher prices, I'm obviously gonna take the stronger of the two sisters. In this case, it's the NASDAQ NQ. So I'm looking to see if this bullish order block on a daily time frame can support higher prices. So I'd like to see if tomorrow we can take out it would actually be interesting if the daily candle closes without sweeping the low that it made already, because we would have essentially a tiny fair value gap between this candlestick's high and this candlestick's low. That's of course if we don't make a new low today, right? So we'll have a fair value gap and an order block to see if we can hold higher prices. But again, the other possibility that I would have is if we trade higher into this area, this weekly inversion fair value gap, going into CPI. So essentially, if we are here during the London session 2 to 5 a.m. New York local time, then I'm looking to see if we can trade lower going into CPI. But of course, if I'm selling, I'll be selling S&P. If I'm buying the NASDAQ. So yeah, that's if we trade into this area between 2 to 5 a.m. New York local time, then I'll be looking to short from there. But if we trade into this order block, then I'm looking to buy from here. Of course, if I'm looking to buy, my invalidation point is going to be the candle that started the order block, which is this low. If I'm looking to sell, then I'd have to be on a weekly chart and use the first candle, which is here. That's actually technically this one, this swing high here, which isn't, it's just crazy. But that's if I'm looking to sell with this weekly PDRA and potentially taking it all the way down to this low one more time. So the risk reward would actually make sense, but I'm not really a position trader or a swing trader. So, but that's an idea to have going into next week. So that's all I have for now. I don't have much else to add. Yeah, for now I would say take care, good luck, and good trading.